Hello, everyone. Good morning. How is everyone doing this day, right? Today being 25th of December. Today is Christmas. How many of you are celebrating Christmas? Let me know in the comment box below. And to everyone who are attending our live stream sessions, I'm wishing you a very happy and a Merry Christmas. All right. During this occasion of this particular festival, we want to make sure that even during the festive season, we can provide you with as much of value as possible. Correct? So today, the live streaming session, the three live streaming sessions that will be taking place will be based on educational content. Correct? How many of you are excited for today's live analysis, or sorry, live stream sessions, which will be based on education? If you are excited, let me know in the comment box below. Today, with the markets being closed, I'm sure everyone who is attending our live stream sessions is already aware. But for those who are not aware, today the England stock market will be closed on the occasion of Christmas. All right. So, how many people have entered the live streaming session, and how many people are ready for today's first live streaming session? All right, let's begin with today's live stream session by a quick introduction of the one and only Harsh. I am Harsh. I am a financial trader having 8 years of trading experience in the markets. I trade the forex markets, the commodity markets like oil, gold, silver, as well as the US based indices markets such as the S&P 500, the Dow Jones 30, and the Nasdaq 100. Currently, with the Indian market, we are looking for analyzing how the indices are performing, such as Nifty and Sensex, as well as looking for hot stock recommendations in the Indian individual stocks. I am more of a technical trader. I specialize in technical analysis, such as supply and demand, price action, order flow analysis, swing analysis, wave analysis, as well as Fibonacci retracement analysis. So when it comes to the field of technical analysis, the field is quite vast and expansive. But the categories that I have mentioned are the ones that I am focusing on. I have been blessed to be a part of a team of people who have worked as flow traders on the Chicago Mercantile Exchange in the United States of America. Under their guidance, I have gained invaluable experience and expertise in the financial markets. I have also been successful in handling $25 million worth of portfolio. And on top of that, I have also been able to consistently generate 30 to 35% profits on an annual basis. Now, the reason for me to share all this information is you so that you can be rest assured and be confident enough in terms of the value that Harsh is providing to you, our beautiful community members, is being provided by someone who has the knowledge, the experience, as well as the expertise when it comes to the financial markets. So, how many of you are excited for today's third live streaming? Let me know in the comment box. All right, we are going to be making sure that we will be having a good amount of interaction between me and you. Yes, Master Harsh will be doing most of the talking and explaining, but I need your reciprocation, right? I need you to answer my questions or any doubts or queries that you can also have. You can let me know. All right, and I will try my best to do justice to your question. For those of you who are aware that who are not aware that Dolphin Markets and Harsh at Dolphin Markets are aiming to provide you with high value content, correct? Content in terms of analysis, market analysis, in terms of hot stock recommendations, as well as education, right? We have been showcasing our financial sheets that have stating very clearly our credibility when it comes to the Indian stock market, right? We have been performing quite significantly well with Currently, we are sitting at a cumulative profitability of 237%, right? Just in a matter of 3 months. We have taken more than 38 trades in the span of 3 months with an average profitability of 5% per trade, and we have been doing commendable, right? So we want to make sure that you are being a part of Dolphin Markets and that you are willing to subscribe to these live stream sessions where you will be receiving a lot of high value content. I hope everyone is understanding. Let me ask you, what is the main objective for the people who are attending this live stream sessions, right? Let me know in the comment box. So the main objective is definitely going to be first and foremost in terms of making money, correct? When it comes to the financial markets. And second is learning, correct? Gaining valuable information about how we can improve our psychology or how we can improve our technical education when it comes to the financial market. Those aspects are crucial as well, and that is exactly what we would be covering during the live stream sessions. I hope everyone has understood. All right, if yes, let me know in the comment box, based on your opinions, based on your understanding, how well you have understood the clear objectives that Harsh is providing to you. So moving forward, since the market is closed for today because of the festive season of Christmas, we would be focusing on the education aspect, correct? So we have been constantly talking about, or I have been constantly talking about the importance of trading logic, correct? Logical buying and logical selling. And based on the last couple of days, during our third live stream sessions, we have been focusing and giving a lot of importance on trading logic. Many of us who try to enter or who have already entered or been associated with the Indian stock market are very well aware that no matter how well of a mindset we start with, eventually we boil down to just taking trades so that we can make money. But that is not the right way to move, or that is not the right way to sustain yourself with consistent profits in the financial markets. And that is the reason we need to be clear in terms of, first and foremost, understanding our initial intentions and how we can work towards improving, correct? So we had done a lot of detailed talking based on the last couple of sessions, which were focused on the psychological aspects of trading logic. Today, we will be focusing on the technical aspect of trading logic. All right. So, before moving on, how many of you are excited for today's technical aspect, today's learning in terms of technical aspect of trading logic? Let me know in the comment box how many of you are excited and are ready to learn the technical aspect when it comes to trading logic. Remember, it is very important to understand that mastering trading logic can be beneficial for you in terms of attaining financial prosperity. All right. Do not take this concept lightly because it is very, very, very important when it comes to understanding the psychic or our own abilities, based on psychology, how we can improve the outlook that we have been projected about the financial markets, and how there are certain principles that needs to be focused upon that can help you become better in trading. Does that sound good? If yes, let me know in the chat box. All right. So remember, when it comes to the markets, there are many participants in the markets, correct? So if there are many participants in the market, could any one of you who's attending our live stream sessions let me know what are the different kind of market participants in the financial markets? Let me know in the comment box below. So people are writing, yes, Harsh, there are many market participants. Anyone, let me know some of the players, some of the participants in the financial markets. All right, so based on the financial markets, there are various participants, and based on those, these are the major participants. All right, so we have institutions, we have large investors, we have state owned funds, we have mutual fund companies, we have listed companies, as well as small to medium sized investors. How many of you are aware of these market participants in the stock market? Do let me know in the comment box below. All right, so based on these market participants, you have to be aware that overall, no matter how many market participants are there in the market, it boils down to two types of people, right? So we are generalizing all the market participants, and based on the market participants, there are basically two types of people. Anyone who would want to answer or have an idea in terms of which are the two types of people in the financial markets, let me know in the comment box. So the two kinds of people in the financial markets are going to be, the first one is those that give money. All right, those that give money. And second is those that take money. All right, those that take money. So these are the two types of people when it comes into the financial markets. I can see Rocky in our chat house. Good morning, Rocky. How are you doing? A very Merry Christmas, and it's always a pleasure having you during our live stream sessions. So coming back to the two types of people in the markets, those that give money and those that take money. So how many of you are falling in the first category, or in the first type of people? If you are in the first category of people, write down one in the chat box. And if you think that you are the one who takes money, if you fall in the second category, write down two in the chat box. All right. So many people are saying yes. Apparently, most of us are losing money. Correct? When it is about people, market participants, whether it is banks, institutions, investors. Most of the people, when it comes to the financial markets, are losing money. Correct? Am I correct? And that is, something that has to be paid attention to. Correct? No matter how well people are having success in other fields, majority of the investors or traders are losing money. All right, most investors constantly lose money in the markets despite their success in other industries. How many of you agree with this particular point? If yes, let me know in the chat box below. All right. Now we would be talking about the characteristics of those people who are giving money, right? As many of you have mentioned that you fall under category number one, we will be looking at some of the characteristics. Now think about something. If people knew exactly when to buy and when to sell, they should be profitable, correct? But that is not the case. If it was as simple as just knowing when to buy, when to sell, all of us who are in the financial markets would be making money every day, right? Consistently. But that is not the case. Most of the people are in red, correct? Now you have to be very cautious of this particular point. Rather than focusing on the reason that we are losing money, you have to understand that we must start to focus on the results, correct? How many of you are understanding what I'm saying? If yes, let me know. Rocky is writing, why is what whenever we buy, the stock prices starts to decrease? I can understand, Rocky. I can truly understand what you are saying, because this is the general notion that people have been, getting affected when it comes to the financial markets. Everyone who enters the financial markets comes with the main focus of making money, correct? Let me know in the chat box. Does any one of you who is attending this live stream session, any one of you, do you enter into the financial markets to lose money? Let me know in the chat box. So definitely people are entering into the financial market with the aim of making money, but statistics have proven time and time again that 75 to 85% of people who enter the financial markets are on the losing side. correct? So do not worry, Rocky, and that is why you are here at Dolphin Markets, right? Because we would be providing you with valuable content. Please be aware that the markets are closed because of the eve of Christmas, but we will be focusing on how we can build up our trading logic, whether it is psychological or technical, with today's session particularly focusing on the technical aspect of trading logic. So as I was mentioning, many of our investors or traders who enter into the markets are losing money despite having successes in the other industries, correct? So when we were talking about how it is as easy as buying at a lower price and selling at a higher price, if it was that simple, everyone should be making money in the markets. But that is not the case. Most of the people are losing. So we have to start focusing on the results, right? You have to understand when things don't go well, you have to start reviewing whether the issue lies in our skills, in our methods, in our risk control, in our capital management or position sizing. It's not just about taking trades and making profit. You have to understand the underlying issue that is crucial for your well-being and for your future success when it comes to the financial markets. How many of you are understanding? Let me know in the comment box, right? Now, moving forward, we would be discussing about what is good buying and good selling. Any one of you would want to answer what do you mean by good buying and good selling? If you do know the answer, let me know in the chat box. So good buying and good selling is nothing but simply put in terms of buying low and selling high. How many people are understanding this particular point? It is about whenever the prices are, one second, whenever the prices, oh, one second, give me a minute. There has been a small change. One second, one second. Mm. There is a small change. Give me a minute. Sorry for the disturbance. But all right, so we are back on track. All right, just a minute and we will be back on track. Okay, so as I was telling you about the meaning of what is good buying and what is good selling. How many of you understand by what is good buying and good selling? Simply put, it is about buying when prices are low and selling when prices are high. How many of you are understanding this particular concept? It is not very complex. It is simple to understand, but very crucial in terms of implementing. Yes, people know that it is important, and the only way that we can make money is by taking trades consistently and booking profits. But you have to understand that first and foremost, it starts from the psychological aspect, right? I can see Rocky in the chat house writing Santa is telling me to celebrate Christmas Day. Of course, it is Christmas, but at the same time, we want to make sure that we can provide you with high value content when other people are enjoying. We are providing you with information that can make you rich. So yes, Rocky, it is Christmas Day, but this sorry, this live streaming session is going to be only for an hour, and I would be doing my best in terms of providing you with value. So again, I wish you again a Merry Christmas. All right, and I hope that you are gaining invaluable information from our content that is being provided. Correct. So moving forward, we were talking about what is good buying and good selling. Good buying and good selling is nothing but buying when prices are low and selling when prices are high. Correct? How many of you understand this particular point? If yes, let me know in the chat box below. All right? How many people are understanding? This is going to be the common crux. It is for everyone. Everyone is aware or for those of you who are not aware, this is the main aim that we would be focusing on, right? Now, how does the profit in the stock market come from price differences? Would any one of you wants to answer this particular question? Let me know. How does the profit that is being generated in the stock market, where does it come from price differences? If yes, let me know, and if no, let me know that in the chat box as well. All right. So many of you will say yes, and it is the right answer, correct? The profits in the stock markets are coming from the differences in prices. How many of you are understanding this particular point? If yes, let me know about this, correct? Remember, trading is probabilistic. It does not have to be perfect, right? We think trading should be perfect with each and every trade running in our direction in terms of making money. That is not the case, right? There will be, times when you're losing, and there will be times when you're winning. So trading is probabilistic, correct? And does not require perfection, but a strategy for uncontrolled situations. Let me repeat it again. Trading is probabilistic. It does not require perfection, but rather a strategy for uncontrollable situations, because it is during those uncontrollable situations that people lose a lot of money. Now, moving forward, how many of you are aware of the stock market king of the US markets? Does any one of you know who is the king of the US stock market? Who is the best investor when it comes to the financial markets? Any one of you? So people are writing, yes, it is exactly the answer, and it is going to be Mr. Warren Buffett. So Warren Buffett has stated a very important quote, right? And the quote goes on like this: there are two rules that needs to be followed. Rule number one: never lose money. All right, and rule number two: don't forget rule number one. It is as simple as that. But even when a stock market wizard like Mr. Warren Buffett has been focusing and stressing on not losing money, I want to ask, how many of you are losing money when it comes to the financial markets? Yes, Rocky, it is Mr. Warren Buffett. That is correct. So when it comes to the market, how many of us from the audience are losing money, right? Let me know how many in our audience are losing money between 10 to 20% on an annual basis. Let me know in the comment box below. If you are losing, let me know. If you are losing more than 20%, let me know that as well, correct? Because many people are not confident, or they shy away from telling others that they're losing money. So that is not the right way to go. You have to understand that if there are certain things that needs to be improved, you have to first be aware of them, and second, let us know so that we can help you in navigating the financial markets, and we can help you in generating profits. All right, am I clear? So Rocky is writing me. Don't worry, Rocky. There are many people who are losing, correct? Now, some are losing less, some are losing more. So for those of you who are losing between 10 to 20%, you can type one in the chat box. And for those who are losing beyond 20%, can type two in the chat box. All right, so I will have an idea. So as Rocky was saying, and as every other people who are attending the live stream sessions, they have lost money in the financial markets at some point or the other, right? Whether you're losing 10 or 20%, or whether you're losing more than 20%, the outcome is the same, and that is losses. Am I correct? So it is important to first understand and agree to accept that yes, we are losing money, and we need guidance, or we need a clear structure when it comes to attaining consistent profitability in the markets. How many of you would want to make these kind of consistent profits like the way Harsha Dolphin Markets is being able to generate? If yes, let me know in the chat box as well. All right, so I do understand everyone's concerns that yes, people are losing money. Now, whether they are losing little money or whether losing a lot of money, The important point is the outcome is still the same, right? And that is about losses. And that is what moving forward we would be focusing on certain concepts or principles that need to be paid attention to, correct? How many of you are interested and excited to learn about the 8 concepts or principles that is needed for your success in the financial markets? If yes, let me know in the chat box below. Remember, the points that we are going to be discussing are very crucial for your financial success. All right, so let's go on to the 8 points, 8 concepts or 8 principles that are important, right? First and foremost, buy without urgency, right? What do you mean by buy without urgency? We had already discussed this in our previous sessions, but a quick recap: when you are not forced to enter, remember, everyone is taking trades because of making money. So buying without urgency is crucial for your financial success. If you buy with urgency, you end up losing money in the long term, right? Do you agree with me? If yes, let me know in the chat box. All right. Now, point number 2, which will be sell without greed. How many of you want to make too much of profits when it comes to the financial markets, correct? Everyone will say, yes, I want to make a lot of money. I want to make, huge amounts of profits. But you have to understand that it is important when you're closing trades, you shouldn't have the factor of greed, right? Selling or closing trades is the same terminology, but closing consistently at a desirable profit and not over expecting for the markets to move in a particular direction so that you can make much more, because that is not how the markets move. The markets go up and down, right? The markets go in waves. So when the markets are going in waves, rather than wasting time by the markets if they're going sideways, you have to be clear that yes, we should be taking profits, but we should not let greed control. All right. Third point: cut losses swiftly. We had talked about this in detail in the previous session, and we had given you the analogy where some people who fall ill, at the earlier stages when they have just fallen ill, they prefer to go and show them to a doctor. While on the other hand, there are people who say that no, my illness is okay, and it gets very complicated, and people suffer severely. Correct. So cutting losses swiftly means take losses when it is time to take losses, and do not be based on hope that the markets are going to recover, right? And this is why it is important to cut losses swiftly. Fourth is diversifying cautiously. We had talked about how people diversify too much, right? Over diversification is also not good, and we should be clear enough in terms of diversifying cautiously, right? I told in terms of not diversifying in more than 5 stocks for people whose accounts are between a couple of thousand rupees to 30 crores, because this is the category that people come into the retail investor category, correct? Moving forward, remember, these 4 points have been discussed in the past. Moving forward, the next 4 points that we will be covering for today's session will be embracing volatility, recognizing market cycles, prioritizing profitability or probability, sorry, and understanding reversal patterns. So, moving forward with the first one, embracing volatility, or volatility is constant. How many of you understand what volatility is? If yes, let me know in the chat box. Remember, everyone is aware, correct? The markets are volatile. So volatility means that the prices are moving up and down. Now, if you look at the charts on your screens, correct? The prices, if you zoom out from the charts, you will see that the prices are going in waves, right? Prices are going up, prices are going down. So the market, like life, is also full of fluctuations. Fluctuations or volatility is the only thing that is constant in the markets, correct? We have to utilize the power of volatility when it comes to the financial markets, correct? I hope people understand. You have to start accepting about that volatility is a crucial aspect when it comes to financial success in the markets, correct? Many people are buying when the prices are highly overvalued. sorry, or when the prices are being undervalued, correct? How many people are understanding? People buy when the prices are expensive, and people are selling when the prices are cheap. How many of you make this mistake when it comes to the financial markets? If yes, let me know in the chat box below. For example, there is a particular stock which is at 5 rupees. Now, if a stock increases from 5 rupees and you buy it at 5 rupees and it goes to 10 rupees, you should be making profit. But overall, generally, people are doing the opposite. When the stock is at 10 rupees, that is when people buy. And as and how the stock falls down to 5 rupees, people sell. So that is how they incur losses. How many of you are understanding? Remember, volatility is responsible for creating price differences in the markets. Do you agree with me? Yes or not? Now, people who have said they understand what volatility is, can any one of you let me know what is the reason behind volatility? Why does volatility take place? Let me know in the comment box below. So volatility takes place because of supply and demand. All right. How many of you are aware of this? Volatility takes place because of supply and demand. Now, what is supply and demand driven by? Anyone who would want to answer this question? Supply and demand is driven by human emotions. So when you're looking at volatility on the charts, right? Volatility is nothing but the fluctuations of human emotions that are, displayed on the chart. How many of you agree with me? If yes, let me know in the comment box below, correct? All the market movements boil down to fluctuations in human emotions. All right. So volatility is going to be a very crucial aspect, and it is to be understood that it is the only thing that is constant in the financial markets. If you agree, let me know in the comment box below. All right. Now, moving forward, we would be looking at recognizing market cycles. Now, how many of you understand by this term what is a market cycle? If you have the answers with you, let me know in the comment box below. So, all right. So cycles are, yes, going up and down. Correct. So people are responding correctly, and but you have to understand the crux behind market cycles, right? Let us consider the stocks to be like flowers which blossom in different seasons. Correct. There are certain flowers that blossom in winter. There are certain flowers that blossom in summer or sometimes in spring. There are different flowers having different seasonalities of blossoming. Similarly, when it comes to the stock market, many of the stocks have been having different cyclic natures, correct? There might be some stocks which have been great in the past but have started to decline, while at the same time there might be stocks which are declining now but they are going to become hot in the coming days, in the near future. Why is this? It is because of fluctuations, correct? How many of you are understanding? Remember, just holding on to a stock indefinitely in the hopes of making profit is not at all feasible. The markets are going to be having cycles with every stock, every indice, every sector going through different cycles, and we need to make sure that we can utilize the power of flexibility when it comes to utilizing the power of recognizing market cycles. How many of you are agreeing with me? If yes, let me know in the chat box below. For us, we being small to medium term investors, we have to utilize the power of flexibility in terms of recognizing the market cycles and using it to our benefit in terms of generating profits. All right. I hope you are agreeing with me. If yes, always do let me know in the chat box below. Now, moving forward, we will be talking about the next concept or the next principle, and that is going to be based on probability reigns supreme. Does any one of you understand this particular principle? What is your understanding? Let me know in the comment box below. If you have heard about it, you can type one in the chat box, or you can say yes, I've heard about it. If you haven't heard about it, you can type two or no. All right. So you have to understand that when it comes to the financial markets, There is no foolproof strategy that guarantees 100% probability. Let me repeat it again. There is no strategy in the market that have proven to be 100% profitability, right? It always boils down to probability, right? We have to be clear that it is important in terms of achieving probability, right? Through our we should be attaining profitability through the power of compounding. Now we had talked about Mr. Warren Buffett, right? The biggest and the most well-known investor. Even a stock market wizard like Mr. Warren Buffett is himself not attaining more than 60 to 70% profitability on his own investments, on his own portfolio. Please be aware, even the best of the best investors or traders are not 100% profitable. It is always based on probabilities, correct? So if he can be making between 60 to 70%, and if you can be making between 60 to 70%, you should be considering yourself as a stock market wizard as well. How many of you consider yourselves to be a stock market wizard? Let me know in the comment box below. We have to be clear in terms of considering all the factors before placing a trade. Remember, it could be based on whatever factors, whether policy factors, whether there is an intervention in terms of government, in terms of sustaining or increasing the value of a particular stock. These all are factors that can add value in terms of increasing the probability of success, right? So enhance certainty and reduce uncertainty. The more factors, the more probability that you have about a particular stock that is performing, that is going to be having much more potential for the markets to run and perform in your desired direction. How many of you are agreeing with this particular principle? If yes, let me know in the comment box below. All right. So consider factors like industry selection, government support, and company position within the industry. These all factors can always help you in terms of increasing the odds, right? So you have to be aware that when to buy and when to sell is always going to be the overall process when it comes to investing or whether it comes to trading, and how we can utilize the power of probability and not perfectionally not being 100% correct but being majority of the times correct, and that is how we should be focusing on. It is not important to be 100% correct, it is important to be majorly correct. There are people who are traders and investors who are able to achieve only 50% probability in terms of success rate, but still they are doing very well. So please be aware, it's not about being 100% right, but being right on a majority of times, right? Being right majorly. How many of you are understanding? Let me know. And as in how time progresses, you yourself will start to see that you are becoming more profitable. Remember, like the quote says, there's a particular quote that I remember that says, Rome was not built in a day, right? So it takes time, it takes effort, it takes energy. So please be aware that you have to put in the hard work in order to achieve the success when it comes to the financial markets, correct? Now, if you compare our market with the other markets, the Indian stock market has been in a bullish phase since the last couple of decades. We should all be lucky that our economy has been bullish since so many decades. But let me ask you, if the market has been bullish since the last couple of decades, are you being profitable consistently? No, correct? The answer is no, because majority of the people in the markets are losing money even when the indices have been bullish since the last couple of decades. How many of you are understanding this? So we have to understand why, because it is quality assets flow into the stock market, and quality assets flowing into the stock market will be attracting investors, correct? Focus on solving problems and enhancing your success rate. It is not about certainty, it is about probability and how we can utilize various factors to our benefit that can increase the chances of achieving success. achieving profits consistently in the markets. I hope all of you are understanding. All right. Now, moving on to the next point, and that will be based on understanding reversal patterns. How many of you understand by the term reversal patterns? If you do, let me know in the comment box below. So, understanding reversal patterns, you have to be aware that this is a natural law. Anything that goes up has to come down, and anything that has been down has to go up at some point in time. Correct? Is it important for us to know exactly the exact highs and the exact lows when it comes to the financial market? Do you think it is important to know the exact highs and the exact lows in the markets? Do let me know your comments in the chat box below. Many people are saying yes, we should be knowing the exact highs. Let me inform you, it is not important to know the exact highs and the exact lows. We don't need to hit the extremes, we just aim to be close to them. All right, I hope people are understanding. Many people are like, I want to buy it at the lowest price possible and sell at the highest price possible. These all are hypothetical jargons, correct? We are not aware how the markets are going to perform in the future. We might have a bias, we might have a probability, but the markets will do what they have to do because the markets are based on probabilities. Sorry, and the markets are not based on certainties. So people needs to be aware that when it is in terms of identifying exact highs and exact lows, that is not the right approach. Yes, you need to be closer to the highs and the lows, correct? Significant declines in the prices. When the prices are significantly declining, there is an expectation for prices to turn around or for prices to rise. And when there is a steep rise in the prices, eventually there is an expectation that that the prices should start to decline. How many of you are understanding this particular topic? If yes, let me know in the chat box. Also, do let me know if you have any doubts, any queries, any particular point that you were not able to understand. If you do have, I would be you can write it in the chat box and I would be glad to explain it to you once more. All right, so understanding reversal patterns, where people get caught up is they want to take the trades at the extreme corners expecting to make huge profits, but that is not how the markets are in reality, because we do not know for certain what the markets hold for us in the future, whether the markets will continuously keep going up or whether the markets will continuously keep going down is not in our hands, correct? And we have to utilize all the eight principles that we have discussed as of today, right? With the first four principles which had been discussed in greater detail in the previous live stream sessions, and with the last four principles or concepts that we had been focusing for today's session. So I hope everyone has been having a good amount of information. I'm sure everyone has gained invaluable knowledge because very few people talk about these terminologies or these concepts. Everyone is just running behind how can I make quick money in the markets. It does not work like this. Do you agree with me? If you agree with me, let me know in the comment box below. Everyone is saying yes, we do agree. But if you do agree, you should start to take action. It is not just about listening and recognizing, but listening, recognizing, and taking action. All the points in terms of concepts or principles that have been discussed are of prime importance. This can make or break you when it comes to achieving financial success in the financial markets. So, everyone, make sure that by embracing the four principles, making money can be very straightforward. All the 4 points that have been discussed for today's live stream session are of crucial importance, and these can make or break you in terms of attaining financial success. Remember, embracing the four principles will make money become straightforward for you. So I hope every one of you have had a good understanding, a good learning based on the concepts or based on principles that we have sharing. If you have any doubts, if you have any queries, you can always let me know. So let me, we still have around 5 to 10 minutes, and we would be going through a quick recap of throughout the entire course. And if you have any doubts during those particular slides, please do let me know so that I can rectify your queries at the earliest. Does that sound good? All right, so let us go quickly and have a quick look. So we had talked about how we had focused on the psychological aspect based on trading logic, and today we would be focusing on the technical aspect, right? Both are important, psychological aspect as well as technical aspect. We looked at the various market participants when it comes to the financial markets, whether it is institutions, large investors, state-owned funds, mutual funds, listed companies, small and medium-sized investors. There are many participants. Now, even though with so many number of participants, it all boils down to two types of people, correct? Two types of people in the financial markets. Which are the two types of people? The first type of people are those that give money, and the second kind of people are those that take money. It is very crucial to understand that many of us, let me say majority of us, are falling under category one. Am I right? We had talked about how people are losing money, and no matter how successful they are in their own fields, whether it is business, whether it is fashion, whether it is engineering, whether it is architecture or anything, any other field that they are good at, but majorly the people, when they enter into the financial markets, they are consistently losing money, right? When it comes to the markets, they are losing no matter how successful they have been in their other fields. So we had to focus on what are the underlying factors, right? We need to review the crux, we need to focus on results, understand the issues and start resolving them at the earliest. We need to understand where is the main issue lying, whether it is in our skills, methods, risk control, capital management, or position sizing. There are many factors that are responsible. It is not just about taking trades and closing trades, it is about understanding all these factors mentioned that are crucial, right, for your financial success. We talked about what is good buying and good selling, and how a simple concept such as buying low and selling high is of vital importance when it comes to making profits in the markets. We had given the example of people hypothetically should be buying a stock, for example, if it's at 5 rupees, and should close in the trade if it goes to 10, right, thereby making a 5 rupee profit per stock. But in reality, it is opposite. People are buying when the prices are high, and people are selling when the prices are low. So they eventually are incurring losses. How many of you are understanding this particular point? If yes, let me know in the comment box below. Then we talked about price differences. How does the profit in the stock market, how is it generated? So it is because of price differences. Now there are many concepts when it comes to you know the reason behind price differences, but at the end, yes, the profits that are generated in the stock market are based on price differences. All right, it is going to be the same, because everyone is understanding that only when prices are moving, the difference in terms of where we had bought and where we want to close, that is the only way that we can be making money, right? So it is very important to understand that yes, the ultimate profit that is being generated from the markets is based on price differences, correct? And we had also mentioned that how trading is based on probabilities. Trading is probabilistic. It does not require perfection, but rather a strategy for uncontrollable situations, because it is during those uncontrollable situations that people tend to make heavy losses. Do you agree with me? Let me know in the chat box below. All right. So we had focused, we had mentioned the most well-known investor of our times, Mr. Warren Buffett, and he had also said that there are just two rules, which is not losing money. Correct? Rule number one, never lose money. Rule number two, never forget rule number one. It is as simple as that. The main goal, sorry, the main focus of Mr. Warren Buffett, or the main point that is to be considered based on Mr. Warren Buffett, is not to lose money. But then we had asked people, why are people losing so much of money in the financial markets, right? On an average, people are losing between 10 to 20% of their investments on an annual basis. We had asked every one of you whether people are losing between the range of 10 to 20%, or are people losing more than 20%, and we were getting a lot of answers, right? It is a reality, but it is good that you are responding to me, because your response is, is important. It is nothing to be shy about in terms of making losses. Only if you accept the responsibility that yes, we have been making mistakes, or we have been losing money in the markets, can someone rectify the issue, right? Like Harsh from Dolphin Markets, we can understand the issues underlying your losses that are incurring in the markets, and how we can rectify them so that you can start to become profitable. Correct? So whether people are losing between 10 to 20%, or whether people are losing more than 20%, the overall crux remains the same, and that is losses. And that is where we had focused on the eight concepts, or the eight principles that had to be focused on, that you must be clear about, right? You need to memorize them. We had discussed all the 8 points: buy without urgency, sell without greed, cut losses swiftly, diversify cautiously, recognize market volatility, embrace volatility, recognize market cycles, prioritize probability, and understand reversal patterns. The first four had been discussed in detail previously in the last live session. We had dwelled deeper into the last four concepts or principles, right? How we had talked about volatility, that the reason for people to make money in the markets is based on volatility. That is when we are buying low and selling high. And what is the reason behind volatility that had been mentioned in terms of supply and demand? Why is supply and demand crucial, or how does supply and demand work? It works based on the fluctuations on human emotions. Correct? The entire market is based on, or the entire price movement in the markets are based on fluctuations in human emotions. Correct? We had given a good amount of detail in this particular concept. Then we had talked about recognizing market cycles, right? So what was a market cycle? How we had talked in terms of how different stocks have different cycles. Different sectors had different cycles. Every stock does not appreciate or depreciate the same way. Different stocks are appreciating, which are falling down. On the other hand, there are other stocks which have fallen down and are appreciating. So every stock has a cycle, a market cycle, and how you and me can utilize the power of flexibility when it comes to recognizing market cycles to our benefit. We had talked about probability reigns supreme, where it's not about being 100% correct, but being probable. Entirely, the market runs on probability, how we can use various factors to our advantage, and based on probabilities, how well we can achieve financial freedom. Let me repeat that it's not about being 100% correct, but being majorly correct, right? Based on probability, that can guarantee us financial success in the financial markets. Correct? And last but not the least, we had talked about understanding reversal patterns, how prices generally tend to move. Correct? And it is a natural law. If prices have been appreciating, there is an expectation for prices to reverse. If the prices have been declining, there is an expectation for prices to turn around as well. It is a very common but natural law that has to be focused upon. So I hope everyone has had a good understanding. Yes, it has been more informative. Remember, the stock market is closed because of Christmas. So we have been focusing on providing you with educational content, right? And not just any basic education content, but very advanced and complex education content, right? It may sound very simple or lame, but it has a lot of value. So I hope everyone has had a good understanding, and to everyone who has been with me till the end of the session, a huge congratulations and well done to each and everyone who has, you know, attended all the pages of this particular live streaming session. Make sure to stay tuned for the next live streaming session where we would be providing you with more education, correct? And I hope to see all of you every for that session as well. Again, wishing everyone a very happy and merry Christmas, and I will see you later for the second live streaming session. Until then, namaste. Take care and have a great day. Bye bye.